As Ben said, my name is Don Pataxel. I am the advisory manager on CUCollaborate's market analysis and expansion team, which is a long-winded way of saying that I speak with credit unions across the country really in support of understanding how they can optimize their regulatory framework and meet strategic objectives as far as field of membership and charter are concerned to grow and reinvest in enriching member benefits. So really excited to be here today to talk about a topic that's really increasingly important for credit unions that want to grow with purpose, and that is underserved area expansion. CUCollaborate is an industry leader in supporting credit unions with underserved area expansion. In today's conversation, we'll talk about how credit unions can pursue such growth in a way that is both strategic and mission aligned. Specifically, we'll cover what an underserved area is, which institutions are a good fit for this path, and why success ultimately depends not just on gaining approval, but bringing that people helping people ethos of our movement to life. In that spirit, I'm proud to be joined by Starlight to highlight how our partnership can help credit unions turn underserved area expansion into measurable community impact. To set up the foundation, I wanted to get back to basics and talk about what is an underserved area. And an underserved area represents the exclusive opportunity in pretty much every instance for a federal multiple common bond credit union to expand its field of membership through geographic means. Underserved areas are not just groupings of cities or counties, but instead represent this very, very delicate balance of four concurrent requirements as prescribed by the NCUA. And I've listed them out in a distilled form here on screen. Those requirements are that every underserved area at a minimum must qualify as an investment area, which is most easily understood as being statistically distressed. Specifically, at least 85% of a given underserved area's population must come from geographies that are determined to be distressed largely by income and kind of earnings below the federal poverty level in order to qualify it as an investment area. If we think of underserved areas as a juggling act, kind of understanding that we have four requirements to work with, this is the first ball, if you will, that we throw into the air. The second is lack of access. This is kind of the underserved part of underserved areas. And in this lack of access, what the NCUA requires of us is to demonstrate that through a ratio of qualifying financial institutions, the geographies comprising our underserved area have less access to in-person service. That's two. Our third requirement here is that every underserved area must contain a service facility, and this requirement is really quite important. Whether it's now or within 24 months of approval, every underserved area must contain at least one in-person site where a member can deposit shares, submit loan applications, and receive loan proceeds. Often we are asked the question, does a co-op shared branch, for example, meet that service facility requirement? And often the answer is no. Without some memorandum of understanding or kind of firmed up agreement with another credit union, we often find that shared facilities do not meet this requirement. And that's really by virtue of the fact that other institutions don't have a ton of incentive to take loan applications on your behalf. And so for that reason, that submit loan applications transaction type is really quite important. Our last requirement in this juggle of crafting a qualifying underserved area is that every underserved area must qualify with one of the NCUA's well-defined local community definitions. The NCUA, for those of you who are familiar, has very prescriptive requirements as to what constitutes a well-defined local community. And the three forms that can come in is a single political jurisdiction, which is going to be a county or some subportion of a county, a statistical area community, which is going to be all or a portion of a statistical area up to a 2.5 million population cap, or a rural district, which can be a combination of both geographies in a statistical area as well as outside of it. Rural districts are distinct of the other two in that they have a more limiting population cap at 1 million inhabitants. And we also need to prove the rural aspect of it in that the density of any area must be less than 100 inhabitants per square mile. And so, as you might imagine, to strike a balance with all four of these requirements, it becomes an exercise of competing priorities. How do we capture the markets we want while maintaining federal compliance? For that, our proprietary software is really a differentiator, and it indicates why we have supported more underserved area approvals than any other vendor in the market. Who is a fit for underserved areas? This slide really speaks to, what we think about as credit unions who are most aligned to underserved area expansion. And the fact of the matter is this: not every credit union is equally positioned for underserved area expansion, largely by virtue of some of those requirements that I've just outlined. However, many institutions are predisposed to very much align with the ethos of what an underserved area represents. In our opinion, the best candidates for underserved area expansion are the ones who exhibit the characteristics that we have listed out here. If you're a credit union with geographic ties to your foundation, underserved areas are a really excellent option. We understand the efficacy of the many pathways that are available to especially multiple common bond credit unions. But in the end, our research shows that credit unions with geographic ties continue to memberize individuals in the easiest way. We also think that underserved areas are great for those who use mission as a compass. So if you're a deep digging, trust building credit union, we think underserved areas are a really tangible commitment to how you can bring service to those who need it most. And if that sounds like the kind of organization that you operate within or run, we really think that underserved areas are for you. At CUCollaborate, we really specialize not only in crafting underserved areas that we understand would be approvable by the regulator, but also kind of undertaking the effort of getting them approved. And when we think about approval for underserved area expansion, we tend to frame it around the NCUA's framing. The NCUA approves underserved areas against a somewhat nebulous phrase, which is ability and intent. And what that means in practical terms is that the NCUA wants to understand on a resource and know-how level, how can you serve residents across the areas that you're asking for? So to break that down further, for ability, the NCUA wants to be convinced that the credit union has adequate resourcing to serve residents across the requested area. So that means whether it's in person, remotely, or through some combination of the two, as is most often the case, successful credit unions must demonstrate that they have the operational readiness to serve the area both now and over time. For intent, we really find that strategy is going to be the key, especially how we think about that strategy evolving over time. In the application, credit unions must demonstrate its desire that the request is not just a grab for land, but rather a commitment to enhancing service for those who lack strong access. There is no demonstration of ability and intent without strong evidence to pull it all together. And this is really where my team kind of leads the market in kind of providing data-driven strategies that serve to bridge ability and intent to support gaining approval. If I flip quickly to slide 5 here, I really think this slide does a wonderful job of talking about what's most important to CUCollaborate, not only in underserved area expansion, but how we support credit unions. And that is that all of our work is anchored in data. It's at the heart of everything we do. So we really seek to recommend underserved area expansions and the strategies that get them approved by getting out of the way of the data at the heart of it. And I think if you look at some of our impact numbers, they really tell that story best. In 2025, we supported credit unions in the majority of all approved field of membership expansions, with an average expansion 250% larger than those that were approved without our support. This is largely by virtue of our wide-ranging expertise and the fact that we have dealt deeply with regulators on every level, not only on the federal side, but across many, many states. To speak a little bit about how we approach underserved areas as far as a delivery perspective is concerned, we've distilled it here on screen. When we support credit unions in undertaking underserved area expansion, we do a few things. First of which, we use our proprietary software to draw custom maps that best align to stated credit union opportunity. What that means is we're going to have a conversation. We want to understand what you're after, and what we can do with our software is kind of take all of the universe of field of membership opportunity and kind of narrow it to what is most approvable in line with federal regulation, and really set you up for as smooth of an expansion process as possible. From there, we work with you to draft regulator-ready materials that have a 100% success record for approval. We work with you end to end to really ensure that it is as light a lift as possible, in ensuring that we can gain approval and set you up for what you do best, which is delight members, both who are with you today and who are in need of your service in a kind of an unmet capacity. From there, I think what's really important is coming out of approval is really just the start. And we support credit unions in implementing their plans. So it's not just kind of an approval and done, but something more holistic. And I think for today's conversation, it's this last point that really matters in the end, because underserved areas are only as valuable as the impact that enables your credit union to drive. On slide here, I think we talk a lot about application drafting and how we request underserved areas and put a lot of emphasis on that. I mean, and rightfully so, but I think this slide captures something that is perhaps most important to this presentation, which is that approval for underserved areas is not the finish line. After approval, the real work of underserved area expansion begins, because we are then empowered with the task of effecting true change. Lest we forget that underserved areas represent an opportunity to bring greater access to the people who need it most. And so all of us, here on the call today understand that to uplift those that need the most support is not a kind of overnight effort. It's one that requires a lot of data and attention. And for that, we really feel like, CUCollaborate can be a strong partner. I think what we do on a day-to-day basis across, in my seat and across the seats of my team, is we help credit unions get to this approval position, yes, but we also help them to go through this iterative cycle with data at its core, asking the question of how do we refine our outreach? How do we analyze some of our product adoption? And how do we run that through a refinement cycle such that we are deepening the way that we are lifting people up in our community? Because I think at the end of this, that is what underserved areas are about. They're about pulling everyone up and promoting something more equitable as far as financial stability is concerned. And I'm really, quite excited to be sharing the stage with Starlight here today, because I think they really share that mission in their own work. And I think together through this partnership, we support, a strengthened movement by ensuring that people helping people aren't just words. That is what I have prepared here today. Ben, I will kind of pause and let the Starlight team prepare their materials.
Awesome. Thank you so much, Dom and Ben. I'm really excited to be here with this team. Let me just get my slides up and we can dive in a second. So excited to come and speak to this whole team here and share how we kind of have been thinking about this sort of challenge of how do you serve the underserved and proactively serve your existing and future low to moderate income members and really, really support them. Let me start by saying Starlight is very centered on how do we bring proactive assistance to every community member, either existing or future, for your credit union. Why does this matter? And a lot of you live and breathe this all day, so you can kind of think of this as us just reminding everyone just to reset the base of why this matters. The average American is struggling to get by, and this is getting a lot worse when you look at recent data. Whether it's folks living paycheck to paycheck, which is over 60%, 67% recently, folks living below the ALICE threshold where they're working but struggling to make ends meet to hit their average cost of living, rural, urban, tier 1 cities, all the way to like tier 3 cities across the US, is a consistent problem. And we're seeing that inflation is causing stress that is worsening year by year. And like the recent sort of gas prices, the challenges of affordability continues to rise. The perception of this has also shifted, both in financial insecurity, which like Gen Z is really struggling, and like 30% moving to 48% feeling like more stressed about how they can handle it, and wages not keeping up with cost of living. This is also obviously seen in the data that you all are looking at, whether it's credit card debt or folks feeling financial instability. The income volatility is also extremely high when we think about households that are using gig work as a primary source of income, which is 1 in 5 now. The other side of this from what's happening is this is kind of worsening as you think about the recent past over the last few years, whether it's members facing financial stress in terms of cardholders with balances, folks needing emergencies that they're struggling with, and then the cost of food, gas, utilities, and home prices rising. But this is not sort of like unique to just financial services and credit unions and your membership dealing with this. Every industry is dealing with this in how they've operated. And I want to highlight this for a minute just to talk about how data and insights has led other industries to adapt and how we can bring this back to our movement and how we think about it. Retailers have started accepting SNAP and EBT in a much wider scale. And this is just a couple of examples, but in the last like 2 or 3 years, we've just seen more and more online and offline grocers start to process EBT, both SNAP and WIC, and bring that in. You've seen this with cell phone carriers, where you're seeing like T-Mobile, Verizon, AT&T expand and partner or offer sort of wholesale services to their downstream sort of smaller vendors who are offering plans for a much cheaper price because they realize that the average struggling American cannot sustain $100 plan, for example. And so they have $25 plans. And these bottom are all powered by different companies, not one. Come back to financial services, and you're seeing over 33 million users of apps like Earnin, Bridget, Clio, and Dave who are giving immediate, super short-term cash advances to your members because they're actually struggling to make ends meet and need help. And you're already in the right place to help them. But the question is, are they coming to you or where are they turning? And you look at the top 25 apps in the App Store, like basically about like 30 to 60% of them are apps similar to these, which are helping folks with temporary short-term cash assistance. You see this with folks like Walmart, which has gone into financial services with OnePay or Chime, who are talking and using language similar to credit unions when they talk about members and how they're helping them support them in times of financial stress. So what does this all kind of bring back to us? Credit unions already are receiving these requests. And Filene did this really interesting piece of work along with financial health studies saying that 80% of consumers are already coming to us at the credit union asking us, hey, are you going to help me improve my financial health? And this is an interesting question because historically, we've seen ourselves as a loan shop or a deposit shop, and we're able to offer key financial services. But what more are the members asking for? And there's like an unmet need problem here because 14% feel we're actually serving that need when 80% are coming to us with a lot of questions. And if we actually solve these financial health needs, they're more likely to be satisfied, loyal, and be part of the cross sell as they continue and grow in their financial journey. One of the really interesting member segmentation pieces that Filene did across, members across the US with, 20 plus credit unions was to see what are the states of these members and where they are financially. And then it follows up with the question, what products and services are credit unions giving them? And for folks who are like hopeful help seekers, who are like early in their career sometimes, or struggling to make ends meet early on or early career, or they're folks who are like trying to optimize and balance their budget and quite struggling with it, that's 43% of the credit union membership across these two chunks we're talking about. It's a pretty significant piece of members you already have and you're aspiring to get as you think about expanding to underserved areas because they have needs and services, but we're not always necessarily solving for them. In addition, just to kind of think about this from a demographics perspective, everyone in this call is probably thinking about this exact question of where and how do we get more of the young members to use credit unions, whether they're Gen Z, Millennial, or Gen Alpha. And the average credit union age versus the average American age has a huge disparity. But this maps into saying, what are you bringing for the underserved areas and the members who need help? And there's a variety of products and services that make sense. Starlight addresses one of those key products and services, but I kind of want to just zoom out for a minute and say, what do we give? a struggling member who's going through financial stress in their life and they're early in their career, maybe they're in their first job, maybe they just lost a job or they just started a family. And often the kinds of products and services they need are things like second chance checking, credit builders, a small dollar loan program, which helps them access small dollars instead of like those fintechs we showed you, which have much higher APRs at a rate that a credit union can offer them, local partnerships that help them kind of access and support themselves, or coaching and support, and ways to access benefits, which I'll talk a little bit about. This is kind of the crux of where Starlight came from, was we understood that when you spend hundreds of hours talking to low to moderate income households about their needs, they start to tell you what they want. And we can actually go figure out how to do this. When you look at the key expenses a household has, it's like housing, transportation, childcare, food, education, and utilities. And there are federal, state, and local programs that can support households in these budget areas, especially in underserved areas, based on your income, your household structure, and where you live. But a lot of these households are leaving money on the table, which even as before they join your membership and after they join your membership, could become part of their financial journey. And so this money is valuable and it's also like critically valuable when you're sort of living paycheck to paycheck and dealing with stress. I'll give you a couple of very detailed examples, and we can kind of think about this as a broader situation where in childcare, there's over $128 billion in child tax credits. Only 12% of eligible families are getting it. And there's chances for them to get a lot more of this. Utility assistance is over $6.5 billion just in federal and state programs. And then utilities themselves in all of the geographies you're in have programs to help low income households catch up on their bills and support themselves because it's part of how they think about balancing out between low to moderate income households and the rest of their membership in the way their regulated entities operate. Only 17% of households actually receive the money they deserve. So there's a lot of households leaving money on the table. And so no matter what your membership looks like, whether it's young, old, young families, seg-based, your community charter expanding, as you expand and think about what needs your members have, it's obviously your current products and services, but there's an extension of like what other ways can we supplement their financial resilience and support them with more money. Give you some examples, right? Students might be eligible for food assistance. Young career folks might be getting utility assistance or healthcare if their employer doesn't provide it. First-time homebuyers get a lot of assistance programs that they might not know they're qualified for. Young families facing a rise in costs can actually get support on very specific things they need, including childcare, young infant support. And also, in a broad sense, whenever there's a disaster or there's unemployment hitting someone, those households are qualified for a variety of programs, but they often don't know what it is or need help navigating that. So, what's Starlight? We help proactively help your credit union bring members government assistance programs and put you at the center of this relationship without you having to actually teach your team, staff them up, or do it because it's powered by a technology solution that enables this. Starlight is enabling members to access support for a lot of their key expenses. What does this look like? Starlight proactively identifies what programs a member qualifies for. We guide the member step by step through applying, and then we help them navigate outreach through like step-by-step processes to navigate each of these assistance programs, helping them think about how to get it. And even if they're not qualified for a program, we find local nonprofits that could support them in that key expense area. So the member feels tremendous support from the credit union and think about what they could be accessing. This helps your credit union almost have a relevant product for 30 to 60% of the membership, especially in underserved areas, and deliver this turnkey. This is also significantly useful when you think about growing your relationship inside new communities you're entering with a new branch, with the new expanded field of membership. And you can offer this to your community, amplify your local partnerships, whether it's with like local nonprofits, YMCAs, expand that community. You can also deliver immediate savings to every member as they join the membership because you're actually scanning all their key expenses and finding them support. Non-members can also see the impact you're having and gives your credit union a really strong credibility when we think about what we're doing and how we're supporting the members. And it lowers your cost of acquisition for new members because this becomes an instantly valuable product for a member who's struggling financially before they're ready for their car loan or their like high yield savings accounts. How has this actually been used? Credit unions have used this to engage and bring in passive borrowers or indirect members back into the credit union and re-engage them. This is one of our credit unions in Massachusetts who found this extremely valuable to show that the credit union is there for them after that first interaction or the first product that they touched. And this is special because the open rates they saw, the conversion rate we're seeing is tremendous compared to like a lot of other attempts they made to activate indirect members. Other credit unions that use this for their staff. Like I think the fact that there's members at the credit union who are also your current staff who might need assistance and might not be willing to talk about it openly, but through a private tool, they're able to actually access, see, and support them. We also are able to bring rapid response during like a crisis like November when we saw Snap shut down and the government shut down, and several folks who were employed by the government suddenly facing financial stress. So to put that sort of underserved need and solving it with the credit union being at the center of it is something that's quite powerful to help members identify money, staff identify money, and go into the community with this. So this becomes something valuable that you're able to engage with folks. We also are able to obviously confirm and see real money that gets unlocked and given back to community members who need it, and be able to kind of reinforce the fact that credit unions there throughout your financial journeys. And how do you kind of be there for them throughout that engagement process? When we think about what members might see, it's things like housing, it's things like SNAP, child tax credit, Medicaid, identifying benefits and then guiding them through getting it. We obviously realize this is complex. So each of you has a different nuanced understanding of your local communities, both from your counties, your field of membership, or the state you're in. So Starlight has expanded and only recently got to all 50 states, Puerto Rico, and DC, so that wherever your members are, like we're able to be hyper localized and personalized to their needs and bring that community understanding of the benefits ecosystem to the members delivered through the credit union. Come talk to us. We're always excited to share more. And obviously, this is something I nerd out on. So I'm always glad to chat about it.
Well, thank you both, Shri and Dom. I know we were planning to leave a good chunk of time for questions and comments. We kind of like breezed through a lot of content in a very short amount of time. So I want to give folks just a few minutes just to collect themselves and gather any thoughts or questions that they might have as we have several minutes here to do so. But maybe I'll start with you, Shri, on this one. A common question I have is like, kind of what is this looking like at existing kind of like credit unions today? Like, what does bringing impact to a community look like at a credit union?
Yeah, thanks, Ben. It's a great question. I think the critical thing that happens immediately with every customer we've worked with so far is that their staff starts to bring it up when they encounter a member facing stress. So it's like the baseline is when someone actually calls in, comes to the branch, chats with the team at the credit union about them facing financial stress. Now the staff has something they can immediately turn to and offer to the member in that moment that's actually relevant, timely, and useful. The second thing that we've seen is they're able to look at their recent product usage and see, okay, who's got insufficient funds, who's had recent balance challenges, who's facing financial shocks that the credit union is able to look at proactively and reach out to them, not with please pay us, but it's instead let me help you. And it like shifts the entire narrative and the perception of what the initial contact from the credit union looks like. And then it's a much more interesting sense, like in the branches now, you have like, the QR on top of the TV above the teller, where the member sees that, hey, we're here to help you. Let's see ways to help you and find support through scanning this QR code. And so we see a pretty interesting shift in the breadth of what you can do for a member has shifted because it goes from a set of financial products to like, what else can we do in a more general sense? And so that's been a big shift that we've seen with all of our customers. And then depending on the credit unions, there's marketing teams that are heavily engaged. There's business development or seg strategy members who are going into new employers talking about how we can serve them. There's folks who are bringing it into their lending and collections processes to offer to when they're lending to low to moderate income members because it becomes really valuable for them. And then from a broad like member experience CXO strategy, it's like, okay, what are our set of products and services? What's the right next best product for our members? And Starlight becomes part of that toolkit of when and how you bring it up for existing members or for acquiring new members in the markets you're focused on.
Awesome. I have some questions coming through the chat here. It looks like a couple for Starlight, and then I have one for CUCollaborate for Dom here. So I'm going to pitch this back to you, Shri. This is a great question. How does Starlight help people move from like government assistance and benefits programs to like financial independence and success, the things that credit unions are really good at doing? What does that look like?
Yeah, that's a great question, Art. And I appreciate the way you framed it as well, because I think we think of us as providing a bridge when people sometimes might not even know that it's available. Because if people start to spiral into financial stress, it's really tough to get out from the bottom. So we're almost like, how can we provide a bridge before they get there? So one of the key pieces of how Starlight thinks about it is proactively helping members gives them that bridge, and then they can kind of actually partnering with the credit union think about what are the broader steps they need to be taking, which might involve immediate relief followed by thinking about my budget and my debts and how to balance that out, go in maybe to the credit union and get a debt consolidation loan if they're struggling on certain bills. It might even be as simple as them sitting down with one of the credit union staff and doing a quick budgeting and planning exercise with their financial coaches. And so it's part of this like 1-2 step where it's like immediate relief followed by a broader thinking about your financials. The other piece is that Starlight, in all the markets we work in with our credit unions, we often also have referrals to workforce programs and ways to think about upskilling, improving your income side. Because we're obviously very focused on the expense side when I think about what Starlight's obsessed with. But there is a piece of like thinking about the income side and how you get into a state where you're able to like upskill, find the right job, grow your own financial picture so that there's a path towards that. But I think a lot of this is us in conjunction with the credit union and their network of local community partners to actually do this sort of, I call it like full life cycle of the member's needs. And we're one piece of that puzzle, but I would hesitate to say we're solving all of it. I think there's a lot more that the credit union and their local community does together to help a member succeed.
And I'm actually going to give this one back to you as well, Sheree, as we have you on. Norma has a great question here on, and I think you alluded to some of this. If you could expand a little bit, I'm going to add to her question. So her specific question was, or Norma's question was, tell us more about how Starlight works with credit unions to increase member engagement through their tools and services. And I'll just add, you mentioned, working with credit unions that are focused on maybe SEG development and maybe serving SEG employees well, organizations well through that. Could you add in a little bit of color content there too?
For sure. So that's it. First thing I'll start with is Starlight is white labeled. All of us on this call will know Starlight. Your members will know however you choose to brand it. So we've actually had credit unions come up with really unique and interesting names for how they think about Starlight as part of their product offering to the membership. So some have called it like a benefits navigator. Some of them have called it a bridge up. Some of them call it like better tomorrow. And it's baked into their plan for the set of products and services their members should be accessing. So that's part one is that, we are kind of behind the scenes and engaging and helping you offer another product to the members. The second is Starlight is either an on-ramp or an off-ramp into your existing products. So often members will arrive because of an interaction with the credit union or them noticing that you might be in times of need that where Starlight can help. We often will then end with saying, hey, well, have you considered going back to the credit union for the high yield savings account? Or here's a credit builder. And so the products and services that we refer in and out from are something that the credit union partners with us to decide and define, and then we surface it. So that's kind of the first phase of it. The second is we're part of the marketing and the digital banking strategy for a lot of our partners. So it becomes like, hey, we can take this member and offer them a chance to use Starlight, then maybe like recommend this and take them on a journey through a series of our products as we drive engagement. And then for members who are especially like single product members, if you think about it as like they're only got a loan product or only have a checking account, this gives you a chance to give them a second product that they can adopt, which is valuable, delivers a ton of immediate impact. And then you can then be like, oh, now that I've found you $1,200 this month, would you like some help with like other things you need, which the credit union can help you with? So that's kind of the core of how we've seen Starlight really drive engagement. And for most of our customers, our emails, texts, notifications are often some of the most engaging things they've done with the credit union. So it shows that the members' delight is quite high when they start to engage with us. For the question, Ben, you were asking about SEG and activating there. We've got a full marketing toolkit present for each of the teams at the credit union so they can turnkey bring this to life, whether it's like postcards, handouts, email templates, or even communications inside your sort of employer relationship or your nonprofit relationship so they can see, oh, wow, I'm not even a member yet, but you're already offering me a ton of value from the credit union, and it sees them seeing you in a very positive light before they decide to memberize. So that's kind of the main way we've seen that activate. And there's also ways where we partner with the credit union as a whole and analyzed all of their membership and their potential members to see how much Starlight could be valuable to every single person. And that allows you to be very personalized and proactive, saying, hey, if you're in this zip code and you have certain characteristics, we can actually walk in with like a pretty strong sense of like, am I able to help you? Even before we started the engagement, so that the member feels this sense of both delight and value from what we can bring them.
I have so many more follow-up questions for you, Shri, but I'm going to hold off on those. I do have one coming through offline, but that's specific to some of the things that CUCollaborate does on the underserved areas. So this one would be for you, Dom. In your experience in working with credit unions, what are like some of the triggers that you're hearing are seeing or experiencing when a credit union says, I want to expand? Why are credit unions wanting to actually like expand through the underserved areas component? Or like, what is it that credit unions should be thinking about when they're maybe reaching capacity in their current field of membership as it pertains to adding underserved areas?
Yeah, definitely. I think over recent years, we've noticed, so I'll frame it in a charter context and then drive toward a more concise answer. But I would say in recent years, we have observed that more and more credit unions are moving away from a community charter, which tends to be a kind of county-based field of membership, toward the multiple common bond charter. That is by virtue of numerous reasons, some of which are that a community charter is capped to one of those three well-defined local community definitions. So at most, with a handful of exceptions, if you are a community charter, your maximum potential field of membership is somewhere around 2.5 million. In many instances, you are at 1 million or fewer. And so we find that credit unions who are coming up against that as far as a market saturation are needing to revisit ways to expand how they reach into markets, and especially those institutions who are most interested in uplifting, individuals who may have less than perfect credit, who may be outside of the mainstream financial services system. And so for that reason, we often find institutions who demonstrate some of those characteristics. I think too, part of it is the multiple common bond charter is just the most flexible by virtue of numbers of ways to create a member. We have the opportunity for select employer groups. We have the opportunity for associations, and I think underserved areas really empower a multiple common bond credit union to say, with this toolkit of, I'll call them memberization channels, we know that we can solve for the biggest problem that exists in the credit union industry, which is we face eligibility hurdles. And so I said it before, but I'll repeat myself that geographic means are the easiest way to make someone a member. And so if you are a multiple common bond credit union, without geographic means, we think you're leaving members on the table. And we think that's especially true if you are mission oriented as far as wanting to lend deeply and ensure that you're extending credit to those who need it most. So I would say that tends to be the primary driver for how we think about underserved areas. And in some instances, we are seeing increasing numbers of state charters move over to the federal charter system. And so by virtue of what the federal chartering system allows for as far as moving a little bit freer across state lines, and of course, there are nuances and exceptions to all of this. But if we want the most flexible charter, the multiple common bond charter is it. And underserved areas, that being that geographic route, are the best way to, as easily as possible, create new memberships.
Yeah, I think just to kind of like add on that a little bit from like a outsider's perspective, if you will, having come from credit unions. Yeah, I mean, I think that membership eligibility is always going to be one of the biggest like pain points, I think, for credit unions, but it's also a key component to who we are as a movement, and exclusivity is like going to always be a component probably of credit unions. And so thinking about it from a how do I reduce the friction to prospective members to joining the credit union is always going to be kind of like top of mind, I think, probably for, I would hope, everyone in the industry. But as we're seeing at credit unions, more and more so looking at like removing the eligibility part as much as possible through associations, through multiple different ways to qualify, and making that part a non-issue for credit union prospective members, and getting back to like what's the heart. Like, I actually just like need money as a member, or like I need like help. I need support, and that's why I'm coming to the credit union, right? Whether it's a low interest rate auto loan, or in Starlight's case, access to benefits that I didn't know I had access to. Yeah, it's an interesting kind of like way to look at what kind of credit union do to make sure that eligibility isn't an issue when they're coming and saying, hey, I would love to work with you as a credit union. I wanted to make sure that I don't know if we fully answered this question or if we addressed it, but normally had a follow-up question on there's a tendency for potential like new segs to either decline or move away from exclusivity with only like one credit union in their local community. Any thoughts on how to break through that conception, or aside from like just removing the exclusivity term, is there any ways to like showcase the value of like why partner with maybe my credit union over another one? Any thoughts there? I feel like some of these tools are probably a way to do that, but
Yeah, I mean, I defer to the CUCollaborate team a little bit on this, but the thing I would say is I think it's centering the members' needs or the non-members' needs before they even join us is to say, okay, what all does a worker at a SEG really need, right? If they're a hospital worker, it's like, okay, they need like rapid cash, maybe 2-day advance payroll. They want a quick way to access benefits if they're qualified for it. They want ability to get a small dollar loan without paying predatory rates for it. And if we can put that bundle together, it's like exclusivity or not, we can probably be very compelling to them. And the risk here today is that they might be turning to, a Chime or a Chase if they're not seeing us as an option present from their SEG today. But defer to Dom and Ben about the SEG and how to think about it.
The other dimension I might add is just that select employer groups tend to be very responsive to outreach that feels tailored to their characteristics. And I think Shri was saying this, but I'll just say it in a different way, which is that, if you know that it's an education-based group, thinking about how the education of community in your area manifests as far as demographic concerns, and how we can think about it. Could be on a marketing level, it could be on a product design level, but kind of pairing how we make decisions with the demographic characteristics that they most demonstrate. And so I think that is the way that we see credit unions build greater trust in an environment where, say, exclusivity is not as valued, by demonstrating that we're looking directly at you and the needs of educators, to kind of continue in my example. And so it could, one thing that I happen to know of from other institutions is just thinking about during the summer months when educators or the school year is out, how do we support those individuals? What does it look like to ensure that if it's lending or it is kind of back to school and supporting how the children in the classroom, but also the preparation of materials, all of those. So I would say thinking about the needs of your SEG and how they show up for their work every day tends to be most successful. And to the extent that we can partner some of those identified needs with data as far as demographic considerations or product design, I think is really going to be our strongest pipeline for trust.
Yeah, and I'm gonna then piggyback off of Dom's comments there, and to put this into, maybe this might be going a little bit off topic, but I think it's relevant for every credit union, really, whether you're seg based or community based or whatever. We all have community relationships, right? Hopefully, at least, we have organizations within our community that we support, whether philanthropically or directly through their our addition, their addition to our charter and our service of their employees, right, or whomever. So coming from a multi-common bond credit union myself, I will definitely say that it was really hard to sell the idea of a free benefit. So I would often go into seg groups or new prospective seg groups saying, hey, we would love for you to serve you through our credit union by you being one of our segs. And first question would be like, what's a seg? And then the second one would be, why? Like, what is the credit union doing? Why would I choose you? And then oftentimes, like, before we figured out how to talk to it, it'd be like, well, why wouldn't I just partner with XYZ other credit union? Right. And so I think the differentiator part is certainly key. But also, to Dom's point, it's really resonating with who the employees are. And the one additional component I wanted to add to that was where we found the greatest success was when we could actually showcase in real data, and by data I mean like dollars, the financial benefit that we were extending to our our members and our employees of our segs. So if I could go in and say we save on average a teacher in this case, $300 a year by being a member at our credit union, that starts to ring a bell, right? That starts to help them wrap their mind around, oh, that's why I would partner with this credit union, right? And so whether it's tailored products and services or solutions that meet the needs of the demographic that you're trying to serve, really think about it being a true employee benefit and trying to put like a price to it, I guess, so that people understand it, because it's really hard to understand free, I've found out. Anyway, so getting back to it, I don't have any other questions coming through the chat. Thank you so much for engaging with us. I'm going to leave just one 30-second space of time to offer in any other additional comments, questions before we end. As I do that, if you have any other questions around what Starlight does, please do reach out. Sri, if you want to toss your email in the chat, we'll send you follow-up email so you can connect with us directly. And then if you would like to learn more about some of our expansion efforts at CUCollaborate, I'm going to put in a meeting link here for our strategic advisor of expansion and field of membership stuff. So feel free to reach out to Jeanette there on that as well. So thank you guys. Really appreciate you guys spending your afternoon with us. Looking forward to seeing you all at some point in the near term. And if not, maybe we'll catch you at a conference or an event coming up in 2026. So thanks, everyone. Have a wonderful rest of your day. Thanks, Tree. Thanks, Dom.